Here again with smart system. In previous lessons, we looked at the double top pattern and the double bottom pattern, which are two charting patterns, which show that the momentum needed to break a resistance level. If we're talking about a double top or a support level, if we're talking about a double bottom is not there in the market. Because of this, when these patterns show up on a chart, traders look to trade a reversal of the current trend. In today's lesson, we're gonna look at two more patterns, which also show that the momentum needed to break a resistance level or a support level is not there in the market, which are known as the head and shoulders pattern and the reverse head and shoulders pattern. After we have a good understanding of these two indicators, then we're gonna look at a specific strategy with exact entry and exit points of how you can trade them. So let's get started. A head and shoulders pattern is basically defined as one peak in the market, followed by a second higher peak in the market, followed by a third peak, which is lower than the second peak. The first peak is buyers in control, drive the market up to a certain level, and then sellers take back control, driving the market down, which forms the first trough. Buyers then take back control, which runs up to the second higher peak, which forms the head of the pattern. Sellers back in control, form the second trough before buyers take back control, and form the second shoulder of the pattern, which is the third peak. And then the pattern is completed when the neckline is broken, which is formed by the two troughs. So the support level for this pattern is the two troughs, which are formed between the shoulders and the head of the pattern. So you can see that there. So once that level's broken, that completes the pattern. And the market is theoretically supposed to sell off from there. And you can see why. Because the markets tried to push up 3 times to go higher and failed. So you can see, sellers will take control there. The reverse head and shoulders is basically a mirror image of the head and shoulders pattern, and basically this is defined as one trough in the market, followed by a second lower trough, followed by a third higher trough. And you can see here, the first shoulder being formed by sellers in control, driving down into the first shoulder, and then buyers taking back control, which forms the first peak of the pattern, before sellers take back control, forming the head of the pattern. Buyers back in control, forming the second peak of the pattern, and then sellers back in control to form the second shoulder of the pattern. And you can see there the neckline being drawn off of the top of the two peaks, in between the two shoulders, and the head this time, and traders look for a break of that neckline, which confirms the pattern is in place and has completed. So you can see there, instead of the resistance levels on the head and shoulders pattern, what is happening here is the market is failing to break support, and so after it's failed 3 times, at 3 different levels, buyers theoretically will be in control for a good portion of the time after that. So you should now have a good understanding of 2 more reversal patterns. In next lesson, we're gonna look at a specific strategy with entry and exit points that traders use to trade these patterns. So hope to see you in that lesson. Have a great day.